Good morning, everybody. Today is Tuesday, July 28th, and this is the QOL pre-market analysis. And before we get into things right now, same thing as usual here. We're looking at our website at QOLtrading.com. If you come to the website, you put your name and your email address in here. You can subscribe to our newsletter that we put out every Sunday. We've put out 19 editions so far, and this is for free. So it won't cost you anything. Just put your name and your email address in there. And when you subscribe, you get a newsletter on Sunday going over the week in review, as well as market levels for broader markets, for Mag 7, any geopolitical news, any economic news that's coming out for the following week. We go over those levels. I give you my bias on things. Of course, these are my opinions, and you have to do your own homework there. But you get a pretty extensive report on what happened in the week, as well as what's going to happen, or what's ahead for economic data and any kind of news that happened over that's going to be pertaining to the markets here. So, and then if you want to join our Discord community, you could either come up to the top here, hit our live trading desk, or our the symbol here for Discord, and it will bring you to the sign-in page. You can join for free. Down in the lower right-hand corner here, it won't cost you anything. If you want to upgrade to our live trading desk, we do live trading from 9:30 a.m. to 11 a.m. Eastern time. And then if you want to get access to our QOL ORB Scalper, you can hit this box over here down in the lower right-hand corner. And then if you want a bundle package for the trade desk as well as Scalper, you can hit this link down here. Monthly subscriptions for all of those. Here's our scalper from yesterday. We're looking at a 5-minute chart. It's a beautiful trade yesterday. You can see our range down here in the table to the right. It was a 315 high in change, and the low is 310. We broke that range at about 855, and your first price target was hit at about 935. You hit a second price target at about 940. So if you follow this and you use your own discretionary as far as understanding price action, your day pretty much could have been done after the first hour of trade. You broke that 310 range, you get your first price target down at call it 306, and your second price target at 304 hour after the market moved. And you can see it plots all of this for you. I don't draw any of these lines here. It gives you your opening range, it gives you the midline. It tells you, the potential if you want to take a short, breaking that range. It gives you an exit sign here when the market is reversing, and it gives it to you throughout the day. And then in the lower right-hand corner, it spells it out for you in text. Gives you the dollar amount. It gives you the mid-range. It gives you the total of the range, $4.34 yesterday. It will rate the quality of the range. It gives you the long grade, and right now it's current. These grades are live right now, so it's giving you a long grade of an A, which is very good. It's giving you a long bias, and this is on the 5-minute chart. You can do a 1-minute, a 2-minute, a 5-minute, all the way up to the 15 minutes. So you can see here's live right now. This is where the market is right now, so it's telling you long bias. You can see the last 25, 30 minutes or so. The market's been popping up here right now. So if the market was trading right now in the actual market, it would be telling you should be thinking of a long bias, and then you have to make your own discretionary decision there. So you can see we have a little bit of a gap down here from yesterday. It'll probably close before the market opens, but if not, that little gap will be there for you. Anyways, let's get into things. If you're new to the channel, subscribe to the channel, hit that thumbs up button, like this video. As far as economic data today, we have at 8 o'clock, we have actually 9 o'clock, we've got CB consumer confidence. You've got a few numbers here. You had goods trade balance was down 101.5 billion, expected 100.3 billion. I'm not sure how that's going to impact things right now. I think we're waiting for tomorrow, which is a big day. You've got the Fed funds rate and the FOMC statement press conference at 1 to 1:30, so that should impact things. And of course, we have earnings this week. Tomorrow, after the bell, when the fund starts, you have Microsoft and Meta. Robinhood, Qualcomm, and then on Thursday we finish off the week with earnings with things that'll move the market: Apple, Amazon, Reddit. I don't know if anybody's trading Reddit, but Reddit seems to be moving. But Amazon and Apple for tomorrow as well. That should impact the market as well. All right, let's get into things right now like we normally do. We're going to start with, let's get over here. Let's get our VIX going here. Okay, the VIX is, popping around right now. We did have, you had a little gap in on, what was it, on Friday, came up and closed that gap, no problem. Hanging around the 200-day moving average at $18.70 and below the 100-day at $19.37. Like to lose this 200 and maybe pull back down here to this 50-day moving average at $17.31, and ideally to pop below the 1658 20-day moving average. And the reason why you want the VIX to go down is because that means that the broader markets and the rest of the stocks are doing well. When the VIX is elevated, it's a volatility measurement. So it's telling you that if the VIX is high, that means that people are probably taking risk off. So let's take a look at the oil right now. Oil's coming down nicely below the 50-day moving average at $83.41 a barrel. I'd like to get below this 20-day moving average at $78.21 a barrel, and then possibly pop below this 200-day moving average at $75.37 a barrel. And then maybe close this gap up from July 10th at $71.63 a barrel. We still have some gap downs. One from May 22nd up at $96.99 a barrel, and then there's I think that's the last of it there. So, all right, let's get into the broader markets again. If you're new to the channel, subscribe to the channel, hit that thumbs up button, like this video for me. I appreciate it. Where are we? Yes, here. And here we go. Below the, like we said yesterday, when you're below your moving averages, your thesis coming into today should be popping fades. However, we are probably chopping around in here and could be consolidating a little bit, waiting for some earnings data tomorrow, as well as the FOMC statements that's going to happen tomorrow. So I expect things to be chopping around a little bit. I think if you lose this, so you had this point of control that closed here from June 12th. 74.34 closed yesterday, so we're going to close that up, and not necessarily close it, but we're going to mark it as fill because it will be a good level to use for your trading. Okay, so that is filled right now. We do have this point of control that one is filled also, and that filled yesterday as well. Interesting enough. So filled 727 as well. All right, so these are decent levels here that you can utilize for your trading. However, you have to make your own decisions. Of course, this is all my bias and my levels here. Nothing's really changed on my levels here, people. So, keep these levels on your chart. I think if you lose this 74.34.50, I think you come down here to 73.63.50. And if you lose that level, we have a midline regressional trend line I have here from October 12th, 2022, sitting down here at 73.06.45. So if you do pop today, this could be a nice little speed zone pushing back into the 50-day moving average, 75.05.72. So put those levels up there and keep an eye on those. Let's go to the SPY. SPY here, we had a little gap from Friday here. We had a gap up, and it closed that gap, so I'm actually going to remove this right now because that's not going to be any consequence. 740.05. July 2nd's low here. If you can get above that, maybe you can recoup this speed zone here into this 743.46 high. If you lose this 739.29 level, I think you pull back into the 736.53 level. If you lose that, 731.75 is a May 12th weekly low that you could possibly target there on that side here. But same thing, we're below the moving averages here. The 50 is sitting here at 745.08. The 20 is sitting at 746.66. Thesis should be pop and fade, so use those levels here. And then also, if you're blowing through those levels will then become support as well. So let's get over to the Nasdaq now. Nasdaq got, big sell-off yesterday on the Nasdaq too. So, you know, the Nasdaq is heavily tech weighted, so you have to watch that. You know, anything that's happening in tech, it's going to impact the Nasdaq a lot harder than it will the S&Ps, because it's 50% tech in the Nasdaq versus 30% tech in the S&P. So hovering right at the 100-day moving average right now. The 100-day is sitting at 27,985 and change. So you got to watch that level there. If you lose this, get some levels there for us here. So this, I would say right now, this 28,167 level, that's going to be a big level. You got to get above that level for to get some more upside there. On the downside here, let's take a look at what we got here. So downside right now, I'm looking at probably, we're right at it, this 27,820 level. So that's going to be a big level here. I will mark that for us right now. That's a big level that if you lose that level, you could come down here. I actually like this level much better. 27,248. So it's quite a bit down there, but I do not mind these levels. So you're going to have to hold this 27,793 level. If you lose that, we have 27,248 in the makings right here. So, you know, ideally, let's get above this 28,167.75 and then push up into this 727, into this gap up that we had yesterday here that actually got filled. I can actually remove that because it's not going to be good. This level right here, though, this would be kind of, it's like the close from Friday. So that would be a break and retest, so pop and fades, right? So you're looking at your moving averages. We're right here at the 100-day moving average. 20 days way up there at 29,310, right? So same thing. Your thesis should be pop and fades, looking for your levels. If the market pops into, maybe pop and fade into those levels. Let's get over to the Qs. Qs are going to be the same thing here, right? 100-day, holding the 100-day pretty good, 672.46. If we can hang above the 675.97, possibly push into the close from yesterday at 682.12, where you'll get some resistance there. And then if you get above that, I like a little resistance up here at the 686.37 level. If we lose the 100-day moving average at 672.46, I've got an April high of this year at 668.90, and then below that, I don't have anything below that. Let me just get something here, see if I can see something here on the. So if we lose the 668.90 level, unfortunately, maybe you could get some support right in here at the 653.81. If you lose that, you've got an October high of 2025 at 637.01. Actually, that would be this would be a fantastic pullback long, right? So, and here's your highs that rejected here in February of this year, came on down, made some lows, and then we got above this level right here, and it held it at 637.01. Perfect break and retest, a longer term break and retest. You could do the break and retest on a shorter time frame as well as a longer time frame as well. So, all right, let's get into our Mag 7s. Again, if you're new to the channel, subscribe to the channel, hit that thumbs up button, like this video. Let's start with NVIDIA. NVIDIA got kicked in the teeth yesterday, trying to hold the 200-day moving average, sitting here at 192.95. We are below the 100-day now at 199.89. We talked about this level possibly holding yesterday. You could see it plowed right through it, and that's why you have your stops in place. So now we plowed through this. This would be a break and retest that we're just talking about right now. So we lost that 199.89 level. If you do get above here, you could pop yourself back into that 199.89 level and get a fade here, right? You're below the 20-day moving average. You're below the 100-day moving average. You are in between the two. You are above the 200-day moving average, though. So if you do pop, just the same way that you lost this level, if you pop hard through this level, this will be a speed zone back into the 20-day moving average at 203.53. But I think semis are a little soft right now. But nonetheless, pullbacks are not bad for the marketplace, right? So if we do lose the 200-day moving average, I got a 188.88 level here. It is a high from March 10th. And then if you lose that level, I've got a 181.22 level down on the downside here. Okay, let's move along. Apple, strongest stock in the Nasdaq and in the S&Ps. All-time highs 339.57. You know we have earnings this week on Apple, so you have to watch yourself. It held this 127% extension level at 134.98. Beautiful level. Uncharted territories on the way up here. I don't have anything up until 360.27. It's very possible if something really positive comes out on Apple, you could get up there really quickly though. So you can see Apple has been really strong. This does become a speed zone here though, so you got to watch those levels. So if the Apple does start to falter a little bit, 334.98 is a level to hold. If you lose that, 329 is a high from July 22nd, and then below that it's a previous high, 323.45, which would be a good high, but it retraces this complete rally that we had here last Friday. But you are above the moving averages, so the same thing we were saying, if you're below the moving averages, your thesis should be pullback longs, right? So that, put these levels on your charts and look for those areas to get long, right? So right now we have nothing on the upside here. It's uncharted territory. The best I could do is give you an extension of a Fibonacci extension of 161.8%. Okay, let's get into Meta right now. Meta, same thing. We are below the moving averages right now. Thesis should be popping fades. Just like yesterday, we lost the 50-day moving average, sitting at 605.30. Today, you got to hold this 592.62, 66 level. If you lose that, next level of support I have is 572.24. It's a high from June 23rd of this year. And then if you lose that level, we have this lower end regressional trend line from October 29th to 25. 562.11, and it also sitting just above this 556.88 level, which is a high from June 26th. We do have an open point of control level from April 30th at 539.79. So if you lose these levels, I do like this level of support down there, right? You do have a gap up from April 22nd as well down here at 528 cents. So put these levels on your charts, people. They have not changed. I have not done anything to these charts for the last couple of weeks, right? Let's get into Google right now. Google's hanging above this 200-day moving average at 323.56. Above yesterday's close, not bad. You got to watch this weekly high from November 25th of 2025 at 330.57. Break and retest, right? We lost this level. Could come back up here and test this level again. We are below the 100-day moving average at 343.98, and the 20 is sitting at 349.94. Watch those levels. However, you could be consolidating a little bit here above this 200-day moving average. If you lose the 200-day moving average and you lose this lower end regressional trend line here at 321.86, I don't mind this, coming down, testing this 319.39 level again. But if we lose that level, I think we come down and touch this fair value gap from March 18th of this year at 310.75. Okay, let's get over to Google right now. Google trying to hold itself here. Same thing above the 200-day moving average at 323.56. Got to hold above that level. We are above yesterday's close right now, but we are below a weekly high from November 25th of 2025, 330.47. Must get above that. But if you do get above that, we do have some headwind up here at 333.69, and it's a monthly low from June of this year. And then above that, we have a midline regressional trend line sitting here at 336.33. So if you can't push and get a pop through all those levels, I don't mind a push back up into this 100-day moving average at 343.98. On the downside, if we lose 319.39, I think we come back down here below this 310.75. Next level I don't have until 287.57 on the downside. Okay, let's keep moving along here. We are on Amazon right now. Of course, we have Amazon earnings as well. Amazon below all the moving averages right now. Same thesis, pop and fades. Below the 200-day, lost the 200-day moving average yesterday, 234.64. We are above yesterday's close right now. It's sitting at 231.39. Below, if we lose 231.39, 226.10 is a high from April of this year. Below that, 220.47 is going to be a line in the sand there. If you lose that 220, I've got a 214.98 level. And then on the upside here, if you can regain, I would say that your line in the sand here is 235.15. If you can get above this, a pop and hold above this 235.15, I think you can push into the 241.62 level, which is a 100-day moving average. And then above that, it's a 242.70, which is a July 7th low. So that would be a break and retest on the downside here, right? Because we are below the moving averages. Okay, let's get over to Microsoft and SpaceX, and we'll do Tesla, and then we'll get on with our day here. Microsoft making a nice little comeback here. Regained the 20-day moving average yesterday, sitting at 387.70. We are in between, though. It's underneath the 100 and the 50-day moving average at 398.86. If you pop up to that level and the 400 level, that 400 level I've been saying is a psychological level. It's also a low from May 1st of this year. So that could be a break and retest. Here's your break of this level right here, coming back up to retest it and then take it back down again. However, you have to be careful. You could be consolidating right now in between the 20-day moving average sitting at 387.70 and the 50-day and the 100-day moving average sitting at 398.86. On the downside, if you lose the 20-day moving average, I think you come back down and test this 381.90 level. Below that, 374.30 is my next line of defense there. If you do get a good surge on it, above 400 and change, next level I have is 413.05. Okay, let's get over to SpaceX right now. We will get moving here. SpaceX hovering on this 109.39 level. It's a 127% Fibonacci extension level on the downside, well below your moving averages here. It's in the doghouse. It's in the penalty box right now. I wouldn't touch this. Even with your money, I would wait until the lockup is done. And also, if they issue more shares, there's just not enough float in this stock to be trading it. However, I know it's the flavor of the month, so people want to have this here. If you do get above yesterday's close, you can pop into this 120.36 before you get some resistance here. That's a 721 low, July 21st low. And then above that, we have an open point of control, 123.61, where I would anticipate to get a little headwind there. Okay, let's get over to Tesla. Again, if you're new to the channel, subscribe to the channel, hit that thumbs up button, and like this video. Tesla's been sliding hard, but something I want to show everybody here that I identified here. So here is, let's clean this up for you. Huge gap down here, people. If you look at these gaps, they get filled at some point or another. Am I saying it's going to get filled this week? It certainly doesn't look that way. However, have these gaps on your charts here, and then hopefully when Tesla, if it comes out with some earth-shattering news, you come back up here and you can close this gap. And if you close this gap, I would anticipate some reaction on the downside here. Now that's, that gap is up at 367.06, so that's quite a bit of ways here. So let's take a look at where we're at now currently. Let me get my trading charts up here. So we had this point of control from yesterday that we spoke about in pre-market. I talked about that this point of control here from Friday was open, and we filled that within the first 15 minutes of the market. 309.64 came down here, and then when you lost that level, and now look what happens here. Post-market becomes support. So that 309.64 is the main level. If you can pop and hold above that level, then I think you can push back up into this 315.74, maybe 318.82 level, and retrace all of that. We have a bunch of speed zones all over the place for Tesla. So, you're going to have to wait for some good news on the market. This is a fantastic speed zone. If it ever does pop back up there, right? So you can see that it'll pop back up into this lower end regressional trend line here that I have from the high of all-time highs set back in December of 2025. On the downside here, though, we got to hold these levels here. These levels are pretty important. You can see it got down to 302.90 in pre-market this morning. If you lose 299.29, I got a 288.77 level there. It's a low from July 7th, over a year ago. Below that, we have a high at 273.54 from October of 2024. So this is a pretty good level here. Oh, we got a little cameo here. Below the 273.54 level, I don't have anything charted on there yet. So I'm hoping that that's not going to happen just yet, but I will get those levels if the market does pull back. We do have a bunch of open point of controls well above us, though, people. So that is a positive thing. I like point of controls that are open above us. So if we go to our point of control chart here, you can see these are filled, and we have a bunch sitting right up here at the moving averages here. So we've got I know there was a 408 level. Here's a 408. That's the closest open point of control that we have up on the upside here. And then it just goes on to the 424. Then you got a 444, 455, 478 level. So just remember, these point of controls, look at this point of control. It was set here from September 4th of last year, and it got filled 10 months later, right? So that's why we leave those levels up on the charts for when something like that happens. Beautiful speed zones that are created right here, but you're just going to need some pop in the market and some influence in order to push that market higher. So I would say right now, put these levels here. Right now, I've got to hold these bottom levels here, 299.29. If you lose 300, I think that's going to be a no-brainer, and then possibly down this 288.77 level. So, take a screenshot, put these levels on your charts right here. You can see this Fibonacci level that I have drawn here from April 25th of 2024. It's a big level, this 50% retracement level. You can see we lost the level. We came back up here, and in post-market on Friday, post-market on Thursday, rather, post-market yesterday, pre-market yesterday, get it together. You rejected that 50% retracement at 318.82. So that's going to be a pretty decent level, and that you're going to need to get through in order for upside, in order for you to get your upside. But you can see we're way below our moving averages, people, right? So what's the thesis? If we're below the moving averages, you're looking for pop and fades. So you're looking for a nice area to pop, to break and break and retest. So an ideal break and retest on the longer side is if you get up to this 325.60, I think you can get some resistance and then pop down there if you do get above this 50% retracement at 318.82. Well, what are we going to do for today? Today, we're going to start with tomorrow's expiration date. We're going to have the 315 calls up here. You can see they closed at $2.69. We are below the close from yesterday, so I anticipate this to open up in the low twos. I may change this call price to 310, depending on what the market gives us today. We have the 305 puts expiring tomorrow. Those closed at $3.15. We are below the close from yesterday, so I expect these to open up in the high threes, maybe even in the low fours. So what does it mean for premiums? If you're new to trading, this means that if the premium is trading, for easy math, it's trading at $3, and you buy a one lot, it costs your exposure is $300. So if you buy a one lot, you can walk away, you can go and get about your day. The most you're going to lose is $300, but you have until expiration date to get out of the trade, right? So we don't expose ourselves to lose 100% of the premium that when we trade, right? The reason why we trade options is for more leverage. So I've never in all the years that I've been trading ever let an option price expire worthless, right? I'm getting in and out of my trades. What I'm teaching here is scalping, not swing trading. So I never have a trade that I take overnight. I'm 100% flat every day. Aside from that, that's going to be it for today. Again, if you're new to the channel, subscribe to the channel, hit the thumbs up button, like this video. If there's other levels that you want me to cover for any other equities, leave me a note down below. Also, if you join our Discord community, you can leave me a note in our levels channel there as well. And if I don't see you in the trade room, I will see everybody tomorrow morning. Have a great day. Keep it light. Bye.